Hi there, I'm Paul Bagnall. Welcome to today's edition of Market Call. Thom is on the show today. He's CEO and Portfolio Manager at Moat Financial. He'll take your questions on North American large cap stocks and options. Chris is an expert in options, so get ready with your questions either on stocks straight up or stocks with an option overlay. Our toll-free number is, as always, 1-855-326-6266. Our email address is marketcall@bnnbloomberg.ca. So use the phone or use the email to get us a question. We'll have Chris answering your questions before too long. In the meantime, Chris, welcome to the show. We've been looking forward to having you on.
Yeah, great. Thanks for having me.
We'd love to get your thoughts on the markets. And I know from some recent commentary, one of the sectors that you like is the Canadian energy sector.
Yeah, I mean, the Canadian energy sector, I think it's being highlighted right now because of tariff talk, and, we do ship so much of it to the U.S. But a lot of these companies, they make good money. They're trading at attractive valuations. Our view is that a lot of them have really been left behind over the last few years as, bigger, more exciting names south of the border have attracted a lot of Canadian capital. So I think that there's a broad range of companies in that space that are good value, and we're definitely looking there.
Do those names require a higher price of West Texas Intermediate crude, or is 75 or so enough for these shares to rally?
I think at these levels, these companies are making a lot of money, and they're one of the things that we really like about the whole space is that they're returning a lot of that capital to shareholders. So they're being disciplined. They're not out there spending money on assets or investments that they don't need. They're buying back their own stocks. So the companies themselves are telling you, we're doing well, we're in a strong financial position, and they're soaking up their own stock, 5-10% of floats of some of these big companies every single year.
Another sector you like, and this is interesting, I think it's almost contrarian, automakers. You like the automaking stocks right now? Yeah,
so I mean, same idea. It's, people are talking about it, looking at tariffs and where some problems could be coming for the space. But like the oil sector or energy sector, these companies make a lot of money. They are out there buying back their own stock and trading at extremely low valuations. So even if there are some disruptions or there is some hiccups in the overall industry, we're not looking for a turnaround for things to get better. If things just stay the same or close to the same, then these stocks should do pretty well.
Does this include the Detroit duo of GM and Ford? When you talk about extremely low volatiles, GM's trading at not much more than four times expected earnings. Ford is trading at about 6.5 times expected earnings.
Yeah, so going to talk more about GM later in the show, but yeah, definitely like these names. I mean, they're producing cars all over the world. They've got strong manufacturing where they can manage where they build the things that they sell in other in those specific markets. So I think there's going to be some changes that they have to make. They're going to have to appease the U.S. government and specifically President Trump for some areas. But I think that the market just needs to start to realize how much money they're making and start buying the shares.
And does your view include the Canadian auto parts makers that we just put up on the screen, Magna, Linamar, Martinrea?
Don't have a huge stance on those companies. We're more looking at the automakers themselves, and just really feel that a lot of those U.S. names that you mentioned, that they could wind up being winners through any tariff issues that happen.
That is Chris.